All right, good afternoon, and thank you for joining us today for part 2 of our 2021 legislative update, a deeper dive into PPP loans, employee retention tax credits, and more. I'm Jackie Petroselli, the marketing specialist here at MP. For those of you joining us on a webinar for the first time, MP is a full-service human capital management services company offering a suite of products and services including HR, payroll, benefits administration, time and attendance, and compliance. We support our clients with cutting-edge technical solutions as well as proactive, reliable service and deep HR and payroll expertise. MP is wired for HR and helps clients succeed by tying their operations to their business goals. Your presenter today is MP's VP of Client and HR Services, Paul Carelis. Paul has over a decade of experience in the HR consulting space, working with businesses of all sizes and in all industries. Paul and his team of certified HR professionals at MP assist clients with compliance, training, and full circle HR guidance and support. And with that, I'm going to hand the mic off to Paul to get started.
Thank you so much, Jackie. Good afternoon, everybody. Thank you for joining me, whether you were a repeat visitor following up from last week's session or brand new. We welcome you. We look forward to talking about some important stuff today and taking a deeper dive. If you are looking for a more of a kind of 10,000-foot view of the stimulus bill that was passed at the end of last month, certainly recommend that you check out the recording from last week, part 1 of this session. Does a good overview of what the programs are and kind of what was shared in the bill. And we'll do a little bit of that today, but we're also going to leverage in some of the guidance that's come out since. The Small Business Administration has given some guidance in terms of the PPP program. The Treasury has shared a little bit more information about that and about the employee retention tax credit. That said, there are still many questions left to be answered. SBA has not updated their frequently asked questions on the PPP. So there's some things that are still up for interpretation. The IRS has not updated their site to reflect the new employee retention tax credit. They admit to such on their frequently asked questions page. So we are eagerly awaiting more guidance, and we'll certainly pass that along to you once we've taken a look at it and interpret it and can give some thought leadership on it. But in the meantime, let's dig in and kind of share what we do know. First, quick legal disclaimer. This is coming from an HR perspective, a best practices perspective. Please don't take anything today as legal advice. Also, when we're talking about matters like these, there's a lot of finance and tax and accounting involved. So before you commit to anything too serious in terms of PPP loans and tax credits and things of that nature, do make sure you're using your trusted advisors in the form of finance, tax, and accounting. Okay, so here's what we hope to cover today in the time that we have. So we're going to go over this new iteration of the Paycheck Protection Program, or PPP. We're going to talk about the employee retention tax credit, some of the guidelines that are in place for, it's really kind of 3 programs in one now, as well as some strategy. We're going to define some key terms that have been thrown around as part of this new bill that are confusing some people. We'll also go over some calculations. Then we're going to go into a few different scenarios and kind of use a couple of sample industries and sample companies, share some information about them, and kind of talk about how they might be able to take advantage of some of these programs or not. And then we'll as always, leave some time for questions and answers. I did, one of the main reasons for wanting to follow up on this is that there was so much information last week, and there was frankly so much still unknown that we ran out of time. We couldn't get to all the questions. There were some really good ones in there, some of which needed some additional research, some of which needed to really wait for some additional guidance. So for those, really the ones that we got most frequently or we thought would be most impactful, you'll see throughout the presentation today that we're going to address those questions throughout. So with all that being said, let's get right into it. All right, so let's start off with PPP. So they've allocated hundreds of billions of dollars to this next round of the PPP program. And they've earmarked $35 billion to what's called PPP First Draw. So what PPP First Draw is for anyone who either missed out on last year's round of PPP loans, took a loan and then got skittish about it, afraid of all the requirements at that time, and gave it back as was allowed, or got approved for a certain amount and didn't take that full amount. They accepted a lesser amount than what they were entitled to, whatever it may be. Or it may have been someone that was ineligible at that time, but now feels that they are eligible. So there is this first draw program. So if you haven't received a PPP loan yet, this will be the program for you if you're looking to just get into it now. So the application for the first draw program opened earlier this week, January 11th, but it only opened for lenders that are considered community financial institutions. So those tend to be smaller lenders that work with women-owned businesses, minority-owned businesses, serve underprivileged communities and things like that. So it's a smaller list of lenders that have their application window open right now. There were many measures taken in the new bill to really do everything that they could to encourage businesses that they felt were either at risk or failed to take full advantage of these programs the first time around, to really encourage or make sure that there were funds and opportunity allocated to businesses that may have missed out or not been able to take full advantage last time. In terms of the SBA regulations, all that it says there is that it'll open up to all participating lenders at a future date. There were some news reports yesterday that speculated or felt fairly confident that this will be next week. So we're anticipating that all participating lenders will have the ability to submit applications starting next week at some time, but stay tuned for that. Qualifications for this first draw are different than the second draw. So let's get into those and make sure everyone's clear on that. First is the employee count needs to be 500 or fewer employees. Companies that fall under NAICS classification code starting with 72, who are generally considered accommodation and food service businesses, they're allowed to have more employees than that, but they have to have fewer than 500 per location. We get a lot of questions about the definition of employees, and we'll get into that, especially when it comes to the employee retention tax credit, because that one is very specific. But in terms of the PPP program, there hasn't been a real formal definition of it. So we generally go by the SBA standards of the average at the time of application. But definitely speak with your lender to see exactly what they're looking for an employee count when it comes to applying for this. Again, this first draw program is open to businesses that didn't participate the first time around or didn't accept the full amount that they were eligible for. In terms of what can be borrowed under the first draw PPP, it's 2.5 times your average monthly payroll costs, and that caps out at $100,000 per employee, so you can't factor in more than $100,000 for any one employee. And then overall, the PPP loan cannot exceed $10 million on this first draw. In terms of calculating the average monthly payroll costs, you're allowed to use a 12-month period. You can either use calendar year 2019, calendar year 2020, or the 12 months immediately preceding when you're applying for the loan. So let's say you're applying for this in February, you could use February to January of this year. It does say in the SBA documents that you can use first draw PPP funds on that expanded list of allowable expenses. So if you were with us last week, you'll know that includes things like cloud computing, payroll, and HR services such as MassPay or such as MP. Expenses to provide employee protection, so things like PPE, plexiglass barriers, air filtration systems, things like that. You can also use it on a longer list of insurances rather than just health insurance that you provide to employees. So things like dental and vision and disability and life insurance. It hasn't been explicitly clear in what the SBA has published so far If when they say first draw, if that means that this expanded list of expenses can be used on last year's PPP, it's clear that if you've already filed for forgiveness, you can't. But for those of you who haven't filed for forgiveness, I've seen a lot of interpretations that feel that you will be able to use the expanded list even for a 2020 PPP loan. But again, I'll feel better about that statement once the SBA addresses that question directly. Okay, so that's the first draw. For those of you, and I know a lot on this call, just my familiarity with some of you folks, you took advantage of the PPP the first time around and you're ready for round two. So this is the slide for you. So the application window for second draw opened up as well this week, a couple days later on the 13th. But similarly, it is not open to all lenders just yet. It's the same group of lenders as the first draw right now. And again, they're expecting next week for that to open up more fully. In comparison to the first PPP with the 500 employee limitation, the second draw is a little bit smaller. So instead of 500, it's now 300 employees that you need to be at or under. Same goes in terms of those accommodation and food service businesses. They can count by location. Some industries have other allowable employee count numbers. So again, you certainly check with your lender if you're at or near that number and feel you might qualify for more based on your industry. It's also stated in the regulations that you must have used all of your original PPP, all of your first draw before you can apply. You can apply, but the loan won't be dispersed until you can state that you've used all of the first PPP. It just says that you have to have used it. You don't have to have filed your forgiveness application yet. So if you're still waiting, doing your calculations, or maybe just frankly waiting for it seems like every couple of months they get a little bit more lenient with the forgiveness. They come out with a more simple forgiveness application, or they allow additional expenses or whatever it may be. So to date, it's been advantageous for people that waited on filing forgiveness. So you don't have to have filed forgiveness yet. You can still qualify and receive the second PPP. You just have to state on the application this time around that you've already used the first iteration. In terms of maximum loan amount, you still have that $100,000 employee cap, and it's still 2.5 times monthly payroll. But for those same industries that are eligible for a higher employee count, meaning accommodation and food service, they're actually allowed to use a higher multiplication of their monthly payroll cost. So they can use a 3.5 times average. Where the first draw had a cap of $10 million, the second draw PPP has a significantly smaller cap of $2 million. So the PPP loan in full cannot be more than $2 million this time around. And then in addition, with the first one, you really just had to state that your business has suffered to some extent as a result of the pandemic. With the second draw, you have to have a more finite and credible proof of those declines. So to qualify for PPP second draw, you need to be able to show a 25% or greater decline in gross receipts from a quarter in 2019 to the corresponding quarter in 2020. So you don't want to be comparing quarter to quarter or fiscal. You can use an entire fiscal year as well if that's more advantageous for you. But if you can show that there was a 25% or greater drop, for instance, from your second quarter gross receipts in 2019 versus your second quarter gross receipts in 2020, that would qualify you for this. A ton of questions last week that we weren't able to fully address because of time and frankly waiting additional information about the definition of gross receipts, but we will respond to that in today's webinar, don't you worry. Okay, so I think we addressed this one, but this one did come up a lot. I haven't filed the forgiveness application for my first PPP loan yet. Do I need to do that first? No, you don't. So as long as you spent the money and are still working on accounting for it and showing your proof of forgiveness and used it, assuming you've used it for allowable reasons, you're good to go. You can go right ahead and pursue the second PPP loan. Another question we're getting a lot, what does this application look like? Is it a lot different from the original? So we're doing okay on time so far. And at the risk of blowing up this entire presentation, I am going to quickly give you a glimpse of what the new application looks like. So bear with me one moment. Okay. So hopefully you're seeing a Paycheck Protection Program Second Draw borrower application form. So this is what the new application looks like if you're going for the second draw. As you can see here, these are the types of businesses that are generally eligible. Everything from C Corps, S Corps, and LLCs to sole proprietors, independent contractors, and self-employed individuals as well. There's also been, and this is a key one, an increase in the number of 501c6 organizations that can take advantage of this. You'll want to take a look at last week's webinar for a little bit more description in terms of which ones are eligible. Some other interesting things and ways that this is different from the original application. In addition to an average monthly payroll figure, again, you'll see here where it's reflected that you can either multiply it by 2.5 times or 3.5 times if you're of the qualifying NAICS industry code. And then you will also see this expanded list of expenses on what you intend to use the funds for. So payroll costs, rent and mortgage interest, and utilities that were all part of the original PPP program now expanded to include covered operation expenditures, covered property damage, covered supplier costs, and covered worker protection expenditures. So you'll see that reflected on this new application. You're also, as I said, where this is only for second-time borrowers, you do need to provide the SBA loan number from your first PPP loan. And then here in this next box is where you list out your qualifying reduction in gross receipts. So they ask you to list the quarter that you're comparing from 2019 to 2020 and the gross receipt amount. One interesting note here, you'll see that it says applicants of loans less than $150,000. So if you're applying for less than 150K, you can leave this part blank, but it is important. Don't think that if you've been successful and haven't had that decline in gross receipts that you can do this and get away with it. It does state here that during the forgiveness process, you will have to show that proof of gross receipt decline. So be careful there. Then some of this is similar to the original, listing owners that have 20% or more equity in the company. And then just some yes or no questions that would determine ineligibility for the PPP program, including ineligible owners, certain loan types, felonies within the last 5 years, United States is the principal place of residence for the employees that you're applying the loan for, and some other details as well. Attached to the application, which can be found on the SBA website, you'll also see this certification form. So you'll want to read through this, and again, for the sake of time, I won't go through all of it. But this is something you will need to attest to and sign off on before you go ahead and apply. All right, so I am going to hop back into the slides. Cool. I think that was pretty seamless. All right, just going to take a quick look at the questions here before we move on to the next program. Some questions about international subsidiaries, affiliates. So generally you do have to factor in affiliates in terms of gross receipts. In terms of the PPP program and eligibility, it does look like in the language, and again, we're awaiting further guidance via the FAQs from the SBA. There's a little bit of confusion in terms of You do need to be US based, but in terms of the counting employees, do you count international employees if you have an international subsidiary? We're waiting for some further guidance there. That's a great question. My company established in July of 2020. Can we apply for the first draw? It looks like they are still restricting it to businesses who were in business as of February 15th, 2020. Double check with your lender, but the way the regulations read right now, it looks like no. I've applied for forgiveness already and the application is under review. Does this mean I can't be eligible for the credit? So that's fine. You can still go after the second draw if I believe what that means. If you're talking about employee retention tax credit, we'll get into that in a moment. Instead of showing our tax returns to show a decline in revenue, we haven't filed 2020 yet. Can we submit an annual report? Yeah. Most likely in the forgiveness process, you'll have to submit the actual tax forms, but again, double check with your lender and how strict they're going to be, but you should just be able to use the figures from your reports. What is the period for the 2.5 times monthly payroll measure? So you're going to take an average of either the 12 months of 2019, the 12 months of 2020, or the previous 12 months from immediately preceding when you're filing for the loan. And again, you have until the end of March to apply for the PPP Second Draw, but there is a chance that it could end prematurely if all the funds are accounted for and applied for before you get a chance to apply. What is the time period over which we must spend this in order to have it be forgiven? So they're giving, great question, they're giving businesses the flexibility to use any time period between 8 weeks and 24 weeks. So a lot of flexibility and some additional flexibility for last year as well, which we'll talk about soon. Some questions about forgiveness on the second draw. That's something that the SBA hasn't addressed too much, but we're waiting for some guidance there. Questions about gross receipts. We'll talk about that in a little bit. Please confirm second draw is 2.5 times the payroll cost. Yes, that's correct. Unless you're accommodation or food service, then it's 3.5 times payroll costs. Does this money have to be paid back? Provided you follow the forgiveness rule, so using at least 60% on payroll costs and the other 40% on allowable expenses and maintain staffing levels, then it is forgiven and does not have to be paid back. If for some reason you don't achieve 100% forgiveness, it's not all or nothing. So if you fail to meet the forgiveness guidelines, once they're finalized and published by the SBA, it might be off by a couple percent. Whatever percent isn't forgiven, that's paid back over 5 years at 1% interest. Okay, a business that's must be a theater or a live music venue, they received one of the shuttered venue grants. They did make a note in the SBA guidelines that if you receive a shuttered venue grant, then you cannot do a second draw PPP. What employer paid benefits can you include in your calculations? Health insurance, dental, vision, disability, life. Those are all now allowable expenses. If we had 25% reduction in year over year for only 1 quarter, but otherwise had slightly greater 2020 revenue than 2019, will we be eligible? So if you can find a quarter in 2019 where your gross receipts were at least 25% higher than that same quarter in 2020, you do qualify, even if the other quarters don't read that way. All right, so I better move on to the employee retention tax credit. I find this one to be a little bit more confusing because where the differences between PPP 1 and PPP 2 are fairly easy to explain and understand. It gets a little bit more complex with the ERTC, as I'll call it. So, as I just said, the 2020 and 2021 programs are starkly different. And here are some key differences to hopefully make it a little bit more clear. First of which is the definition of large employer. So technically, companies are eligible for ERTC regardless of their size, but the rules are different depending on whether you're considered a small employer or a large employer. And so first, let's talk about the definition. Under the 2020 Employee Retention Tax Credit, a large employer is defined as 100 or more employees. One important note, though, especially if you're one of those companies that's highly affected by the pandemic, restaurants and things like that, and other businesses that tend to hire a lot of part-time individuals, these counts are full-time employees. So, and that they follow the definition the same as the Affordable Care Act, where you look at hours, 30 or more hours per week, 130 more or more hours per month. Those are the employees that you count for purposes of this. So 100 or more is a large employer for 2020 ERTC. That bumps all the way up to 500 or more for this year's ERTC. And the difference in terms of how the credit is claimed if you're a large employer versus a small employer, so anyone that falls under these numbers, you can claim the credit provided you otherwise qualify, but you can claim it on any qualified employee wages that you pay. If you are considered a large employer, if you exceed these employee counts, you can only claim the credit on wages and payroll costs that you're paying to employees who are not working. So if you have someone out on furlough, but you're still paying them in some way, then you can count that even if you're a large employer. One important note, and I think we'll address this in the scenarios in a little bit, they did clarify that employer contributions to group health plans count as wages under this. So if you are a large employer, you had employees on furlough and weren't paying them traditional wages, but you were still keeping them on the insurance and paying the employer share, you can claim ERTC for that. So could be a significant source of savings or tax credits for those businesses. The credit itself also varies from year to year and really quarter by quarter. So if you're going back retroactively and claiming the ERTC for 2020, that credit is 50% of wages up to $10,000 for the year. So up to $5,000 an employee in refundable tax credits under the ERTC. That percentage bumps up for this year's program to 70%, and it's also by quarter and for the first 2 quarters of this year. So you can claim the same wage base, 70% of up to $10,000 in eligible wages per employee for quarter 1, and 70% up to $10,000 in quarter 2 as well. So you can get $5,000 ahead for 2020 ERTC, and then $7,000 ahead in quarter 1 and $7,000 in quarter 2 potentially for 2021. So overall, you could max out at an employee retention tax credit of $19,000 an employee if you're able to fully take advantage of both programs. Similar to PPP, there is a gross receipts decline requirement to qualify for this. Potentially, there is another avenue. But if you're using the gross receipts declining eligibility factor, to claim the 2020 ERTC, you have to show a 50% decline in any given quarter, and then you're allowed to use it for that quarter. If there's a quarter where your receipts then get up to 80% of what they were in the preceding quarter, you then lose eligibility and can't claim it for any of those quarters. Whereas the 2021 program, you just have to show a 20% decline to be able to qualify to use the ERTC for wages paid in that quarter. There is, interestingly, they did add what's called the preceding quarter rule. So what that means is if you're, let's say you were just nailed and revenues were way down quarters 2 through 4 last year, but for whatever reason you decide to open back up the first of the year, or you had fewer restrictions the first of the year, and your revenues and gross receipts aren't in such deep decline this first quarter, you are allowed to use the immediately preceding quarter. So if we're talking about being in Q1 2021 right now, you can still qualify for employee retention tax credits in this quarter if you can show that your Q4, the immediately preceding quarter, showed a qualifying 20% decline as opposed to fourth quarter 2019. In addition to this, even if you don't have the adequate proof of decline in gross receipts, you can also qualify for the employee retention tax credit both for 2020 and or 2021 if you're able to state that your company suffered a full or partial interruption in your business operations due to government order. So we'll get into what exactly that means momentarily. All right, first, the burning question we've been getting a ton of. What exactly do they mean by gross receipts? So I'm going to warn you, I don't like to have too much text on a screen, but I think for purposes of this, it's important to just kind of spit it all out. Happy to provide, everyone will receive a recording of this and a copy of the slides, so feel free to reference this, and I'll just put it up here for the sake of clarity. So in short, it means all of a company's revenue in whatever form it's received or accrued. That can include sales of products, numeration for services that the company provides, interest, dividends, any rents received, royalties, fees, or commissions, and then reduced by any returns or allowances. So follows kind of the standard Treasury SBA definition. Generally, receipts are considered total income and what's going on, depending on what type of organization you are. If you're an S Corp, 1120S, 1065 or 1040 for LLC, so on and so forth, as you see here. Some important things, and maybe more importantly, what isn't included in gross receipts: net capital gains or losses, taxes that are collected and then remitted to an authority, so things like sales tax, use tax, withholding taxes, things like that. Also, and this is really important and something that's been weighing on the minds of a lot of businesses, money received from the last year's PPP program. So if, let's say, you received $1 million PPP loan, you do not have to count that towards your gross receipts. So that does not have to be counted towards this. So that should hopefully help some businesses that are kind of teetering on these qualification percentages. PPP funds do not have to be counted towards gross receipts. Okay, so I think I addressed this a little bit, but let's again address, how do I determine my employee count for employee retention tax credit purposes? So what you want to do is take your employees who average 30 or more hours per week and or 130 hours per month for each month of 2019 and divide by 12. If you are a newer business if you opened in 2019 but weren't in business as of January 1st, you'll want to do an average of the full months that you were in operation in 2019. Similarly, if you were if you didn't open until 2020, you'd want to use the months you were fully in business in 2020 for this program. Okay, so here's a question that I promised we would respond to. What qualifies as a quote unquote full or partial disruption to operations? And I guess it depends on how optimistic or how skeptical you are, but we found in the examples provided by the IRS and the Treasury and the like that the definition has been pretty open. So at the most simplest form, they state if more than a nominal portion of a company's business operations are suspended by a governmental order, that would qualify. So some examples that I've seen out there and confirmed. Let's talk about restaurants. Obviously, they've been greatly impacted by this, and some scenarios that might come up. So if you are a business, a traditional restaurant, and because of a governmental order, whether state or federal, you were forced to no longer have sit-in dining. You could only do takeout and delivery. That would qualify as a nominal portion of business operations being suspended. Also, let's say you're that same restaurant and come first quarter 2021, you're now allowed to be open for inside dining, but your capacity is limited to 25% or 50%. That's still more than a nominal portion of your business operations being suspended, even though you can technically perform all of your usual functions, that it's at a mandated reduced capacity. So that counts as well. What wouldn't count is, let's say you're in a place that does not have any restrictions on social distancing. You're allowed to have take in, take out, dine in, dine out, no restrictions, but the general public is nervous about coming in, and you just by customers' own will, they don't come in, or your numbers are reduced that way, and it's an interruption that way. That wouldn't count. It would have to be by governmental order that those numbers are reduced or that interruption occurs. Same could go for retail or banks. If you're limited in the number of customers that you're allowed to have in at any given time, that could count as more than a nominal business interruption. All right, next question, and this is a good one, and we've got some updates here. I'm trying to take advantage of both programs, meaning the PPP and the ERTC. How strict do my PPP wages period have to be? So if you remember, if you've attended any of our previous educational sessions, on the PPP program, you'll know that there was kind of strict measurement of the 8-week covered period or the 24-week covered period. With the government and with this bill trying to provide as much relief as possible, and understanding, and it's important if you weren't with us last week to know that one of the big and most monumental changes that's occurred with this new bill, at least in terms of the employee retention tax credit, is that up until the signing of this bill, you had to pick for 2020 what you were going to do, PPP or ERTC. You could not do both. The new bill amended that and changed it. It does say even for 2020, you could have had a PPP loan and also retroactively take advantage of employee retention tax credit. The one rule and the one caveat being that you cannot account for the same exact wages that you used PPP funds on and then claim a employee retention tax credit on. So you kind of have to be a little bit creative, a little bit strategic, and find a time period that you can apply your PPP loan to in terms of your payroll costs, and then a different period or different amount to claim the ERTC on. But what they are now saying is that you can apply and kind of state that PPP loan money was used for any time during the open PPP period, which was April 1st to December 31st of last year. So if you can allocate the wages that you're counting as payroll costs at any time between 4/1 and 12/31 last year, you can then use whatever time is outside of that window to apply your employee retention tax credit. So again, if you're having to play the strict quarter by quarter game where there's really only one quarter that would apply to you for employee retention tax credit, you could conceivably, and again, speak with your accountant on this to make sure you do it the right way, you could conceivably move the period that you're saying you use PPP payroll costs on to a different quarter. So that could really help some businesses really maximize their ability to take advantage of this. Another question we've got a lot, especially from the nonprofit clients out there and smaller businesses. What if my employee retention tax credit, once I calculate it, exceeds my actual tax liabilities? Well, the good news here, this is a good problem to have. The ERTC is what's called a refundable credit. So should the amount of your credit exceed your tax liabilities, you will get a refund from the IRS, or if you need an advance on that, you can fill out what's called Form 7200. It's an IRS form, and get those monies sent to you. So this may have been the most popular question last week that we couldn't quite address just yet, but definitely some good news on that front. All right, so as promised, let's go into a few different examples here. So scenario number one is going to be Ariba Cantina. They are a one location cantina Mexican restaurant with 35 employees. In terms of their gross receipts, they're down from 2019 60% last year and 40% so far this year. They did get an $85,000 PPP loan in 2020. They've applied for forgiveness and they're awaiting their response. They had to be takeout only in 2020. They've opened for inside dining in 2021 at 25% capacity. So these folks are a great candidate. Their reduction in revenue combined with their governmental order restrictions qualify them conceivably for ERTC. For 2020 retroactively, they'll just have to make sure that the 60% of this PPP loan or more that they're using to account for payroll costs doesn't overlap with their ERTC claim. So they should be able to take pretty full advantage of both programs. When it comes to this year, they meet the 25% greater reduction to qualify for a second draw PPP, and they exceed the 20% for the ERTC in 2021 as well. Again, it's impossible to know all of the details, but based on what we have here in our example, these folks look like a great candidate for both programs. Okay, let's go to scenario number two, Double Rainbows Daycare Centers. So this is a multi-unit daycare center organization. Overall, they have 110 employees. Because of the governmental order and shutting down of the daycare center, the entire staff was furloughed from March through August of last year. Gross receipts were down 90% in 2020, but only down 18% in 2021. They received a $100,000 PPP loan in August of last year. They have not filed for forgiveness. They were, again, mandated to be closed from March through August of last year. They were allowed to open at full capacity in September, but because of where they are and growing coronavirus risk and numbers, they've had to reduce the capacity of students or children to 50% this month. All right, so let's take a look and analyze this one. First, we'll look at the 110 employees. So looking at that, assuming that they're full-time workers, they would qualify as a large employer for the 2020 employee retention tax credit. So they would not be able to claim ERTC for all the wages that they paid last year, but and you'll see here, they didn't really have wages for much of last year, where everyone was furloughed March to August. But as I said before, it's important that they take a look. If they're, and we're of their size, they're most likely offering health insurance benefits. And provided they kept those furloughed employees on the health plan and were paying the employer portion of those insurances, those employees were not working, but were being paid in the form of employer-sponsored health coverage. So the portion that they were paying towards that, they could count and could claim an employee retention tax credit on. In terms of their gross receipts, definitely qualify for ERTC based on that definition for 2020. The 18% is short of the 20% number to claim employee retention tax credit in 2021. But as you can see here at the bottom, we noted that they've had to reduce their student population by half this year. So that counts as a business interruption. So that would qualify them for 2021 ERTC as well. What it does look like they may miss out on is the second draw PPP. Their gross receipts are only down 18% this year. So they may miss out on that depending on how the math all shakes out. again, some details here that are left unsaid, but if they can go back to 2020 and depending on how they're spaced out in terms of enrollments towards the end of the year, they may qualify for another round of PPP. All right, and then finally, let's talk about Maryland's Macaroni Factory. They've got 400 employees. Gross receipts from 2019, when comparing, we're down 20% in 2020 and 5% so far this year. They did not take a PPP loan in 2020, and they had no operational restrictions via the government mandate. So what could these folks possibly do? So they're at 400 employees, which makes them a large employer for ERTC purposes when we talk about 2020. Their revenue decline was not enough in 2020 to qualify for ERTC that way. They also didn't have any restrictions via government mandate, so it doesn't look like they'll be able to claim ERTC for 2020. But it does seem like they could be a candidate for First Draw PPP. So again, the First Draw doesn't have that same 25% receipt reduction requirement, and also allows for companies up to 500 employees to apply. So while they likely wouldn't qualify for the Second Draw, this is a good candidate to perhaps visit the First Draw PPP program, where they could very well be able to take out a loan under that. Okay, let's see what other questions have come in since we last paused. Bear with me one moment. Cost of goods in terms of gross receipts. So it would be the sale of goods, so revenues that way. But again, yeah, definitely take a look at that definition. That's directly from the SBA on that slide. Would you please confirm for the employee retention tax credit, is it gross receipt decline or the number of employees that attains eligibility? So in order to qualify for employee retention tax credit, great question. Size of employee doesn't matter in terms of qualifying for the credit, in that it's the size of your business in terms of employee count only matters in terms of whether you're considered a large employer, meaning you can only claim for expenses paid for employees not working. If you qualify as a small employer, you can claim the credit on all the wages and qualifying expenses that you paid. In order to generally qualify, you either have to hit that gross receipt decline or have the business interruption from government order. How do we go about applying for employee retention tax credit, and how does the credit from the payroll company work? So, great question there. In terms of retroactively claiming the 2020 employee retention tax credit, as of this afternoon, the IRS has still not provided guidance in terms of how to go about claiming that for people that hadn't claimed it already. A lot of people are assuming it'll be via a amended 941 form, your quarterly payroll tax filing form. But there's still a chance that the IRS could usher in some way to claim it currently in the current year or the current quarter. We do not know yet. In terms of the 2021 ERTC program, you will be able to claim that via payroll. For those of you who are MP clients and using iSolved, we're currently doing the final stages of testing on the tax credit functionality, where you'll be able to enter in the relevant information to adjust your tax liabilities accordingly and take advantage of this program. Let's see. For employee count for employee retention tax credit, what if at the beginning of the year you were over 100, but mid-year due to COVID you went under 100? Do you qualify as a small company for the months under 100? So this is an important one. when you're considering employee count for employee retention tax credit, provided you were in business back then, they're looking for you to use 2019 employee count numbers. Should PPP funds received be added to gross receipts income? No. So that was some really good news. You do not have to count PPP funds received to your gross receipt income. You can exclude that. $2021 receipt decline of 20%, is that against 2019 numbers or 2020? It's against 2019 numbers. So you're, with very few exceptions, you're using your measuring stick of 2019, assuming that those were better times for most businesses. I know that doesn't apply to everyone, but your comparison is always against 2019. Is the ERTC 5,000 and 7,000 per quarter in refundable tax credits or annually? Great question. So the $5,000 for 2020 is annually, but the 7,000 for this year is for first quarter and second quarter. Unless we receive an additional stimulus or revisions to this bill, the ERTC program will cease after second quarter of this year. So as of right now, there is not employee retention tax credit available for quarters 3 and 4 of 2021, just quarters 1 and 2. But the 2020 program is just $5,000 for whatever quarter or quarters you may qualify for. You can't do more than $5,000. Can you not claim the 2020 tax credit if you use 2020 PPP proceeds to pay payroll? So you can, you just can't use it for the same exact time periods. So let's say you're claiming employee retention tax credit for November and December of 2020. As long as you can show PPP using PPP funds on wages for other months, so let's say you used it in August, September, and October, that's fine. It just can't overlap in terms of the same wages being paid under both programs. You can't double dip, but you can utilize both programs, just not for the same exact time period and wages. All right, let's see. For ERTC, I thought it was a twofold test, a decline in receipts or a mandatory full or partial closure by law. Is that correct? Yes. So one or the other. If you qualify based on the receipts decline, great. If you don't, but qualify for the disruption in your business operations, that's fine too. So either or, yeah. Okay, someone who arrived late, can you get admittedly so, can you get PPP2 if you got PPP1? Yes, so you can only get PPP2 if you got PPP1. If you didn't take advantage of PPP last year, you have to do a first draw loan first and use up those funds before you would be eligible for a second draw PPP. If you did not use your full amount of round 1 PPP funds, can you use the remaining balance instead of applying for round 2? Or apply for round 2. So in order to apply for round 2 and receive that disbursement, you have to have used all of round 1 first. Does the $100,000 cap on annual salary include other payments such as bonus figures? Yes. So you can't reflect more than $100,000 in any sort of remuneration to any one employee. Let's see if we've got a couple more here. Let's see. Some specific questions here. So covered, we've got some questions about the new list of covered costs for PPP. When it comes to protection for employees, I think I said it before, but it can include everything from PPE, masks and gloves, to physical barriers, to air filtration systems, to expenses for thermometers and temperature screening systems. Also, if you had to do health screenings of your staff, bring in a company to do COVID testing, it looks like that would be covered. Things like that. And then for operational expenditures, good question. Let me bring up my list here. So that's the definition of that as payments for business software or cloud computing services that facilitate business operations, product or service delivery, processing, payment, or tracking of payroll expenses, human resources, sales and billing functions, or accounting or tracking of supplies, inventory, etc. So hopefully that answers that question. I think it looks like we're up against the hour. I hope you got a lot out of today's session. We do have some other exciting content coming. A couple of my colleagues that are real experts in the HR field next week are going to be tackling the topic of COVID vaccines and how to address your vaccine policies and how to address objections from employees that may not want to get the vaccine. I know in a couple weeks, we also have a really good one on cybersecurity and measures that you can take as a business, especially with so many employees working remotely and working from home. Important measures you can take for cybersecurity and some other, we're talking about ACA and a lot of other interesting topics. So make sure you keep your eyes peeled for those. As we get further developments on these programs that we spoke about today, both from the IRS, the SBA, and the Treasury, we'll continue to pump out educational content on those. But once again, I thank you so much for joining us today. I'll hand things back over to Jackie.
Awesome. Thank you, Paul. Thank you all so much for attending this webinar today. MP is currently offering services to help businesses claim employee retention credits and maximize their PPP funds. If you'd like to learn more about how we can help you with these topics and more, you can email us at marketing@mphr.com or schedule a call with us via the follow-up email. If you have any further questions, please send them to marketing@mp-hr.com. We hope you stay healthy and have a great day. Thank you.